Stani, how's it going?
Good. How are you?
I'm good.
Nice cap.
Thank you. The official ETH Bushwick Sigs and Signs hat. You might see it around. Thank you. So stablecoins, let's get into it. DeFi, it has deep liquidity, but not enough places to use it. What's been missing so far?
Yeah, I mean, I think DeFi has become even more clear a place to transact, and I think there's obviously like different flavors of stablecoins, but when you look at the on-chain liquidity that is accumulating, and you can measure that not only on the volumes that are, for example, traded, but for example how lending protocols are able to actually liquidate positions, and that liquidity exists. But I think that there is one category of these payment stablecoins that is completely a separate topic, and I think it's also a big part of DeFi. I think one exciting category is stablecoins related to credit, and that is something that we are working quite hard at Aave, and trying to understand how stablecoins can be used in credit issuance. Aave native Go stablecoin is sort of by nature as an over-collateralized stablecoin or as a CDP model serves that purpose quite well already. And it is backed by obviously these over-collateralized crypto native positions. And what we want to explore more is to understand how to use what DeFi has solved really well over the past 2 to 3 years, which is this enormous capability to aggregate liquidity into financial opportunities. And giving an example is that whenever there is a risk-adjusted opportunity in DeFi, the liquidity moves, in most cases, programmatically to that opportunity. And that is like a really fundamentally big problem to solve. And now in DeFi, we more have a equilibrium where there's surplus of liquidity, and we need more collateral demand, credit opportunities. And that's where credit and stablecoins can play a very big role in the future.
Yeah, so when it comes to stablecoins, and it becoming the foundation of how liquidity is used and how markets form in DeFi, why is that the case?
Yeah, I mean, you mean why there is...
Why some stablecoins are like the center of liquidity for different use cases as compared to others?
Yeah, I mean, yeah, and this is probably a topic for any team that is thinking about stablecoins, issuing them, and try to sort of understand like what are the flywheels of growing a stablecoin. And obviously the first reason why people want to grow a stablecoin, besides let's say for like a payment use cases, is that a lot of these stablecoins are having some sort of underlying yield, right? So there is a underlying strategy that is earning T-bills, which is the most sort of typical stablecoin structure. There are historical reasons why some stablecoins are larger than other ones. USDT is a great example. So when we started building Aave, and before even Aave ETH, there wasn't really stablecoins on Ethereum at all. So everything was transacted with ETH. At those good old times, I don't know if anyone remembers the old small world of DeFi almost a decade ago. But then you had obviously USDT and Tether, USDT and USDC, and historically they filled a important gap, which is how do you hold stable value. So I think that a lot of the more recent growth on newer stablecoins is driven a lot with the incentives. So incentives are driving pretty much like all of the growth, and once the incentives reduce, a lot of that growth or usage actually goes elsewhere. So that is just the nature of a lot of replication of the same types of strategies. And I think what is going to be interesting is to see stablecoins that have a very particular use case, or they don't even necessarily fill the whole condition of a stablecoin, appear as a sort of stable value, but have another purpose. And I think yield-bearing stablecoins are that category where actually the use case is more of a asset management and investment use case, where that stable value actually then acts as a sort of like a form factor rather than stability. And those stablecoins will grow significant. And we've seen in Aave also with the Athena Pendle example, where yield-bearing stablecoins can actually get even further growth by being used as a collateral in Aave and expanding that use case.
Yeah, you mentioned incentives, which I think are important to bootstrap a stablecoin, but you don't want to rely on them for too long. Otherwise, you're spending money you may not have, and then it's kind of like you're getting high on your own supply. So I feel like the next stage of stablecoins is to move beyond incentives and for the stablecoins to be as good as of their yield. I'm curious what your thoughts are about that and the future of incentives in DeFi.
I think actually I'm very bullish about incentives, because I do think that on-chain is a really particularly good infrastructure to reward certain type of activity. The incentives today are very, very generic. So you supply, let's say, you supply a stable coin into Aave, you get some sort of yield for that and reward. But in the future, these incentives can actually be more behavior-based. And you can go quite deep with on-chain data to craft these different incentive campaigns. And the on-chain is really good for distributing incentives, and I don't think there is any other system in the world that does it as efficiently and transparently as DeFi does. So from that perspective, I'm quite optimistic. Whether it's actually is a growth mechanism, that is maybe something that stablecoins won't be able to rely on long term, and there needs to be some sort of differentiation on different use cases.
Yeah, and Aave V4 is coming out soon. I'm curious what changes it'll make in order of like making new markets for stablecoins and how it will affect markets for stablecoins with Aave V4. Yeah,
there is obviously what I was talking about earlier, the credit use case and using stablecoins on the credit issuance is a really big opportunity for us. And Aave V4, it's a next generation of the protocol of what we built in the past. But one interesting difference is that it's a very modular architecture. So what can happen is that typically in DeFi, we lend against ERC-20s, fungible assets. There's going to be lending against ERC-71s. And I'm not talking about NFTs in terms of like art and so forth, but actually different obligations that can be tokenized. And RWAs as well, and also more native, interesting, non-fungible collateral. But a third category that I'm really excited about is actually lending against data. And this then means is that now that we built in DeFi this really enormous and efficient capital allocation layer where liquidity flows into risk-adjusted opportunities, the next chapter and opportunity is to actually solve the demand side. And a lot of the financial opportunities to pursue is actually outside of on-chain. But it's value that can be brought on-chain. And RWAs is a big part of that. I think tokenization is bringing a lot of value and a lot of financial products. And I think that's what Aave Horizon is doing, where stablecoins are lended against these more traditional assets that exist on chain gives a very unique risk opportunity and risk profile for stablecoin lenders. But the category of lending against data could be actually lending against payment receivables, lending against consumer loans, business loans, and also institutional credit. And in those cases, we might not even see any sort of tokenization because it doesn't necessarily make sense as a accounting and a settlement unit.
The data part's really interesting to me because that hasn't been done before. I'm curious to go into that more, the data part. You said account receivables, maybe streaming. Can we go into more of that part of Aave V4?
Yeah, I think that the data piece is particularly interesting because Aave V4's architecture is based on a hub and spoke model where liquidity is stored in a hub, and then credit lines are issued to these different spokes. And spokes are where you have collateralization, you have the borrowing logic. And great example to think about is that in some ways the hub is kind of a central bank, and a spoke is a commercial bank with their own loan book and risk framework. And then from that sort of like a central bank, you're going to get credit lines to these different use cases. And what we noticed a lot, and one of the ideas why we built this architecture is that there's a lot of builders in the space building DeFi. And I think most exciting things aren't still yet built. I think there's a lot of room to innovate. Obviously, a lot of low-hanging fruits are existing. And the Aave V4 hub and spoke model is a great way of actually plugging new innovation into Aave and being able then to scale these new use cases and products with the liquidity, deep liquidity that Aave has. And that is actually the number one problem statement that I keep hearing from a lot of the DeFi builders, that there's a lot of interesting projects being built, and there's a lot of great builders here today, but it's really hard to actually bootstrap your product. So being able to innovate and plug that innovation into Aave is a massive for innovation in DeFi. And I think one next wave is going to be credit. So, how do you actually access Aave's capital and can allocate that across credit opportunities in real life for consumers, businesses, institutions, and do it more in a sort of less trusted, more verifiable, more transparent and automated way than the traditional finance is doing.
Now, going back to stablecoins, how should we think of them today? Should we think of them as assets? Should we think of them as infrastructure? Maybe somewhere between the two?
Yeah, it really depends, because the stablecoin form factor captures a lot. And I think that it's a big mistake, because we're going to see things that we call stable that necessarily won't be stable. And we already see some of these symptoms as well. And I think that is something that, especially when DeFi is starting to scale towards mainstream, we see more fintechs integrating DeFi. We, for example, had a really big integration with WAP, which is a e-commerce platform with 21 million users, now able to access Aave thanks to Veda, Plasma, and these partners that provide that integration. A lot of these users will be trusting on using stablecoins. And in my opinion, we need to start categorizing a lot of the innovation that we have. And I think it's already happening a little bit. We have yield-bearing stablecoins, and there is some consensus around that, what it actually means, the risk, and they look more like funds. But there's a lot of work that has to be done there. So I think that for people in Argentina, stablecoins is an asset because they can escape inflation that is eating all their basically hard-earned money. In some other part of the world, for example, users that are using WOP, stablecoins might mean better transaction settlement and also access to financial opportunities like DeFi. So I think there is now a kind of like a over categorization on the word stablecoin, and that has to be broken down.
Yeah, I think the WAP integration is really cool because WAP is not even a crypto platform, it's an e-commerce platform, and they're plugging into crypto rails. And if you notice in their promotion of it, they didn't even mention crypto at all. They're like, earn 6% on your yield. And then it's you guys, it's Tether, it's Plasma. Can you go into the WAP integration more?
Yeah, it's really exciting because the whole path towards how do you get into DeFi is solved. First of all, WAP is a small startup, started very small with a big idea, solving their own problem of how to actually sell online digital goods, for example. And there's different components. There's obviously like payments, there's PayPal, there is Zelle, and there's a lot of sales happening on, for example, Discords, and you have to automate things. So they created an end-to-end solution to manage the sales process, including the transactions and payments and so forth. So the on-ramping happens through MoonPay. You have wallets through Privy and Tether's wallet SDK, USDT 0 for also for the stablecoin. You have Plasma for low-cost transactioning on the network. You have Aave for the financial opportunities, and then you have Weta for the financial infrastructure. And there's a lot of teams that have been actually involved, including in the Aave ecosystem, to make this integration happen. So it just showcases kind of like how you can build a full earn and transaction stack as a fintech. And that probably is going to be the example for the whole fintech space, how to get closer to stablecoins and also DeFi in a way that it actually helps the users.
Yeah, truly the future of finance.
Yeah, it's sort of having fintech in the front and Aave in the back.
You mentioned yield-bearing stablecoins before. Could you define what a yield-bearing stablecoin is to you and how they should be categorized in the future?
Oh yeah, that's there's probably like a better categorization somewhere, but my thinking is simple: is that there is a dollar-denominated or some other currency-denominated asset that has a yield component into it, and then there is some sort of strategy attached to that yield. We've seen also strategies that are CeFi strategies, basis point trading, for example, when there was a lot of upwards movements on the markets. It can be RWA strategies as well in the traditional finance. Can be also some more native strategies. And the typical arbitrage is that you might have a yield-bearing stablecoin that produces a yield that is and then you use that as a collateral in Aave, and then you borrow stable coins at a cheaper rate, and then you leverage that position to maximize your return. That is a probably example how to define the yield-bearing stable coins.
Yeah, and
also like a really simple strategy that that anyone can execute.
Yeah, and when it comes to stablecoins, how do you see connecting on-chain liquidity to real-world assets?
Yeah, I think that a lot of real-world assets won't necessarily have on-chain liquidity. Mm-hmm. First and foremost, because it's really hard to build. It's costly. And the second thing is that if you have a traditional financial product that has already a market somewhere, there is less appetite to actually make it more liquid on-chain. So I think that's sort of like the incentives are not necessarily there. And on-chain liquidity kind of feels like in public markets when you have a a company that lists their shares in, let's say, NASDAQ, but then they have same shares in some smaller European stock market, and no offense to to Europe and anything like that, but just showing kind of like if there is already really liquid market, then there is less appetite. But I do think that's where it's really helpful is where you actually want to take investments on chain and channel them to TradFi, or you take investments in TradFi and channel into on-chain, and you need that liquidity element there. And of course, I'm more a fan of moving value in on-chain than out of on-chain. And I think the Biddle had a kind of a USDC redemption fund on-chain, which was sort of facilitating a lot of that liquidity, because when you go off-chain, you have these problems that RWAs have, which is T+2 liquidity, and that introduces obviously like the world that we all are trying to escape from.
Yeah, and one final question. We've seen the past 5-6 years, DeFi, TVL, it double topped around 250 million, first in 2021, then in 2024, 2025. What do you think it will take for DeFi to get past that, to go parabolic to 500 billion, a trillion?
Yeah, I mean, first we have to be really proud of what we built. DeFi has existed in less than a year, less than a decade. It feels like a year. So we have to be very proud of what we built so far and all the attempts on all the different products. And I think that DeFi has proven to be very resilient, right? So we had these major protocols running really well, year after cycle after cycle without seeing any major challenges. So, and also they're built on the most volatile assets we can imagine. So DeFi has really proved this resiliency. And these native assets and use cases will keep growing. I think TradFi will start integrating more the DeFi infrastructure. There's going to be more Bitcoin and Ethereum collateral and native assets. I think yield-bearing stablecoins are a category that will grow. And then just the credit aspects, being able to lend against traditional credit is really important. And I personally think that a lot of the growth will come from RWAs, but not necessarily just RWAs that already have markets in traditional finance and are traded day-to-day basis, but actually, infrastructure that can be anything from the future that we are going towards, which I call like the sort of abundance assets. That can be solar, batteries, energy in general. That can be GPUs as well, and things that really matter as an infrastructure in the future. And these assets don't necessarily have the same trading markets as assets that are already listed. But what, for example, Aave's perspective, what Aave does really well and why it's viable is that you can't actually go to a bank and give them your Ethereum or Bitcoin and get a loan, for example. Not as of today. I mean, I tried. But and that means that a lot of these native assets has been unbankable for years. So the key is to find a lot of these opportunities where the technology risk is high enough that maybe banks and financial institutions aren't ready yet to bank against these assets, but DeFi actually will. And that's how DeFi can get more growth near term. And that's what I'm expecting where the things are going to head towards in upcoming years.
Stani, thank you so much.
Thank you.